That's right. We'll be focusing on the first quarter earnings, those have come into the market and the effect that it's having, investors' perception of these numbers with Olawae Olusi, who is an investment analyst with AfriInvestor. Good morning to you, Wale.
Morning. Hi.
So we've been tracking those results that have come in this week. Give us your perspectives on some of them that have come in, particularly those heavy hitters from the banks and, of course, from the industrial goods sector.
All right. Thank you for having me, Harry. Yeah, this week has been largely a week that has been filled with a lot of Q1 corporate earnings entering into the market. And like you mentioned, most of the banking tickers have come in. The only surprise being Union Bank pulled a 102% increase in PAT. Although the growth in the revenue, the gross earning was marginal, but an over 50% decline in impairment charges actually drove the PAT down. So across the sector, for the likes of BT, Zenith Bank, UBA, similar trends have been noticed. Most of them reported a decline in both top line and bottom line. A few reporting marginal upside, that's the likes of UBA. But in the consumer goods sector, we noticed the fact that the likes of Unilever and Nigerian breweries, they were able to weather the storm despite the very challenging economic situation that we've seen so far in 2016. They reported a growth both in their top line and their bottom line. I think for Nigerian breweries, that states the fact that the market dominance is yielding results for them, and perhaps some of the strategy to get their products through to the market is also yielding results, given the fact that consumer spending is not very strong. But the results reflect that people are still buying a lot of their products.
Well, one would definitely have to ask this question. So it seems as if that it's not the data, for instance, that is fueling investors' appetite for equities now at the Nigerian Stock Exchange. It's more expectations. They're expecting to see, in spite of the results that have come out, they're expecting to see still better results from some of these companies.
For how the week has performed this week, I think we need to sound a little caution. The previous week was down about 2.4%, and that drag was largely driven by what happened on Monday after investors reacted to the news coming from MSCI side that Nigeria is going to be ejected from the index. We saw the market decline about 2.4% on Monday before a slight recovery. But from an index level of over 25,000 points, the market has been down to something hovering around 24,000 points. So I think some of the gains we've seen this week is largely driven by bargain hunting. Many of the stickers were down after that initial reaction. So I think investors are repricing many of these stocks, looking at what has happened in the last period. Because if you look at the corporate earnings that have come, that are filtered in the market, there's nothing that suggests the fact that there's been any changes in the fundamental of the market or of the economy. Partially, maybe investors are expecting something good from some of them, but I think largely there's been a lot of speculation on what the price should be and what it should not be, following what we saw in the previous week. The market is set for a week-on-week gain about 2.8% at the moment. I think today is going to close up as well.
Well, Wale, you already mentioned it, but a week from now, that's about April 29, when the MSCI, says it will be expelling NSE from its platform, will actually come to be, although it says it's actually reviewing it and talking to investors. How do you think investors will or should proceed in the coming week?
I think the fact that we already saw an initial reaction after the news came in suggests the fact that whatever is going to come shouldn't, investors will not be, too shocked again, because it doesn't look like there's anything that's going to change from the policy standpoint. I mean, this is not the first time Nigerian policymakers are going to be threatened about liquidity of our market in terms of currency, and they've not done anything. The CBN will not blink. The presidency will retain their stance on this. So I think investors have already priced in this. Yes, we might see marginal movement, but like what we've seen so far this week, there might be a slight reaction if that eventually happens, but the market will correct itself again. Because it's like the big guys that really have a stake that can be affected. I think those are some of them that pulled out last week when the news came in initially.
Wale, thank you so much for your perspectives this morning. Do have a profitable day.
Thank you. You too, Harriet.